Welcome back, and you're watching Market Fatafat on ET Now. This is the show where we get you all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, now we're joined by Thakkar from Sharekhan. Jay, very good afternoon to you, and thank you so much for joining in with us this afternoon. The first stock that you've picked out for us is obviously coming in from the banking space, and that is Bank of India. Look at the up move that we've seen coming in last 6 months, almost a 45% upside there. What is the view on Bank of India now? Should one actually start booking profits for this one?
Well, I would say that one can continue rather with this and not book profits out here, because overall, if you see that Nifty PSU Bank Index has done really well and it's been outperforming the overall private sector banks, and especially as far as Bank of India is concerned, this stock has taken off as multiple swing resistance, I would say around the levels of 100 to 103. So the breakout has just come, and I think till it holds on to this levels of 100 on a downside now, on the upside we can expect the targets of almost 150.
Okay, continue holding on. Bank of India, 150 is the target coming in from Jay. But moving on to the next counter, let's shift to PNC Infra, because this is one of the conviction buys by ICICI Direct, where they maintained their buy rating on this counter for a target price of 460 rupees. What they're highlighting is that the order book is currently holding strong. That provides healthy revenue visibility, well placed to fund their HAM projects, as well as asset monetization is on the anvil, and PNC is currently in discussions with potential investors to actually go ahead with the deal to monetize its assets. And PNC has exhibited healthy execution along with a stable margin trajectory. So that's the take coming in from ICICI Direct, and 460 is the target that they are looking forward to. And on the back of this report, this counter is in focus, holding a gains of almost 1% as of now.
Okay, that is PNC Infra, but let's move on and talk about NCC. And this is a news which just came in today, where NCC's JV has bagged an order worth around 3,200 crore for twin tunnels, and now NCC and J Kumar Infra JV as around a 6,300 crore order from Mumbai Civic Board as well. NCC share in the order from the Mumbai Civic Body, that's going to be of around 3,200 crores. So a construction company, obviously that's the one, they have won a big order win, so keeping an eye out on this one. And NCC share is 51%, while J Kumar share is 49%. So that's how that 3,214 crore amount is coming in as well. So keeping an eye out on NCC on the back of this order win. We saw a bit of a how subdued the stock was moving, but that spike up came in the stock. As of now, just holding on to gains of 0.3% in trade.
Moving on, and let's shift focus to big boy Reliance. Jay, this is the counter that you have picked up on your radar, but do you believe that now Reliance will come to rescue the fall in the markets, or you wish to stay away from the longs at current levels?
As far as Reliance Industries is concerned, the kind of a fall which we have seen started since July. This has been quite an overlapping fall. By that I would say that it's not a straight sharp cut. The stock has seen some short covering in between, and because of which the overall fall has formed a structure of a falling wedge pattern, generally which we technically also call it as a leading diagonal pattern. And it has got a good support now in the near term around the levels of 2350 to 2330 zone. So it has come to a very clear support area now, Reliance Industries, and with that stop loss, or with that as a support, one can get into the stock right now, expecting a bounce back again, at least in the levels of say 2450. So the risk reward is definitely in favor of the bulls right now as far as the short-term trade is concerned.
Okay, surely keeping an eye out on Reliance over there. But let's move on and talk about Concord Biotech. Vamakshi, a couple of brokerage notes that have come in initiating coverage on Concord Biotech, and that's why they're up move in the stock.
Well, yes, Vinny, we have a brokerage note that has come in from MK. They have initiated coverage with a buy rating on this counter, given a target price of 1,340 rupees per share. And largely what the brokerage is attributing is that they're expecting the company to improve its market share in its top 5 products. They're expecting the EBITDA margin for this counter to improve to nearly 45%. And they're also expecting the EPS to grow at a CAGR of nearly 27% by FY26. they are likely to see improvement in the revenue on account of their new launches in the API segment. They're also expecting increased revenue to come in from formulations as well as some new opportunities to open up in the CDMO business. On the back of that, overall, they anticipate the return on capital employed as well as EBITDA margins to improve in the coming years. So all in all, a positive note that has come in from MK. They've given a big thumbs up to this counter, and that is the reason why Concord Biotech is up nearly 2% in an otherwise weak market.
I would just like to clarify, it's not MK, it's Antique that has come out with a note on that. And also we have a note that has come in from Kotak, and Kotak also has initiated coverage today. So two brokerage notes that are initiating coverage, both with a positive rating, even because initiation by Kotak is also ad rating, and they've given a target price of 1,110 rupees per share as well. While Antique, obviously they've also initiated with a buy, and the target price that the brokerage has given is 1,340 rupees. So yes, two notes, Antique as well as Kotak, both have come out with a note on Concord Biotech.
Well, yes, and stock is holding gains of 2%. Moving on, let's shift focus to India Cements then. And Harsh, this is the counter that you have picked up. Tell us what's the news flow.
Yes, picked up an up 2% in trade today on the back of the fact that they've sold a certain land parcel around 73.75 acres to be absolutely precise, 14.5 acres. Also included, located in the villages of Panta Kapale as well as Chinnipalim. Both of these parcels overall have been sold for a consideration of 70 crore rupees, exclusive taxes, stamp duty, etc. to Ultratech Cement. Of course, some amount of capital coming through as well. Some efficiencies being built in by India Cements. On the back of that, stock up 2.3%.
Okay, that is India Cements for you all. Let's move on to stock number 22 for today, and that is going to be Dr. Reddys. Jay, what are the charts indicating for Dr. Reddys? Where do you see this one moving? 23%, 24% return in the last 6 months. What is it the target that one should keep here?
Well, see, as far as the overall pharma pack is concerned, the outlook is positive. For Dr. Reddy also, the overall outlook for the medium to long term is definitely positive. But if you check this in the short term, then the stock has now started to underperform, form low top, slow bottom. We have clearly seen a sell crossover in the short-term momentum indicator. Today, if you see, then the stock has broken its crucial support levels of 5,600 first, and thereafter 5,550 as well. So in the short term, it's heading towards, I would say, 5,300 now, and thereafter it can slide till 5,200 as well. So 53 to 5,200, these are his two short-term targets, and I believe now on the upside, till 5,600 levels are not taken off on a closing basis, the short-term trend for Dr. Reddys is going to be weak. So in this kind of a market wherein you get the opportunities both the side, this is one stock wherein one can remain on the sell side.
Okay, can remain on the sell side for Dr. Reddys. Probably 5,300 is coming on this counter. But moving on from the auto pack, have a look at Maruti Suzuki. That stock is zooming in trade today on the back of two brokerages. Note where Citi has come up with a buy rating on this particular counter and have raised the target price to 1,360 rupees a piece, where they say that even as the car sales remain sluggish, the improving mix will be driving growth for Maruti Suzuki, because in the reports like we have been highlighting, they have improved their mix when it comes to the SUV part of the portfolio, and that's actually a high margin business for them, and that's why Citi is finding it giving a bullish call on this one. But even Morgan Stanley is bullish, overweight rating with a target price of 11,963 rupees, and that's why we are seeing no stopping for Maruti Suzuki since the start of the day. Because yesterday the stock did had a good fall, but for today onto the way up, Maruti Suzuki holding a gains of 2.7%.
Okay, two notes, both positive notes coming in for Maruti Suzuki over there. But let's move on to the next one, and that is Gujarat Ambuja. Jay, what are the charts now indicating to you on this front? What is the level that you're keeping an eye out on today? Or the stock is buzzing in trade today as well. Last 6 months, 34% uptick. What are your takes now on the technical front?
I would say that Gujarat Ambuja has been was consolidating rather, I would say, within a range of 225, 200 on the downside to on the upside we can say 300, 320 levels. Now that range got narrower and narrower, and eventually it formed a good symmetrical triangle pattern on the daily charts, which is quite visible on the weekly, monthly charts as well. And now the stock has provided a breakout from this huge consolidation that started, I would say, at least somewhere in the mid of 22, and now towards the end of 23, or maybe a quarter ahead of 23, calendar year 23, we are getting a good breakout. So almost after 15 months of consolidation, Gujarat Ambuja has provided this breakout with an increase in volumes, clear bullish crossover in this momentum indicators. With this kind of a move, I think the stock is ready to take off its all-time highs, and it's likely to inch towards the levels of 400 and 450 going forward. And now I believe that 300 will act as a very crucial support in the near term, and below that 280 is also support. So 280 to 300 is a good support range, whereas 400, 450 would be a good target range on the upside.
Let's move on and talk about Idea Forge. That's the next stock that is in focus. And today, why is that in focus? Because the drone manufacturing company has actually secured an order which is valued at around 58 crores approximately. That's excluding GST. And this is for supply of 400 surveillance copters and complete with accessories to Messrs Strategic Marketing. Now, the contract is set to be executed over a period of 12 months. So on the back of this order win of 58 crores, we saw the stock buzzing in trade. As of now, given up all its morning gains and just trading with gains of 0.1% in trade.
Okay, moving on, and Jay, coming to you to know your take on ICICI Prudential. How are you looking at the chart for this one, and which side are you? Are you sitting on the long side, or any suggestion to short this one?
As far as ICICI Prudential is concerned, I would say that this stock recently has provided a very nice breakout above the levels of 560, post which it retested those breakout levels and again formed a fresh highs. I would say weekly charts going above the levels of 600. In this market sell-off since past 3 days, we have seen this stock correcting, but then my take is that till 549 levels are held, till then the higher tops, higher bottom formation will be intact on ICICI Pru. And the way the stock has provided a breakout from a falling channel, it seems that the wave 4 on the daily weekly chart seems to have got over, and there is a very high probability that it takes off its recent or previous swing highs of 615, and the target would be around 630. So if you see, the risk reward is absolutely in favor of the bulls. 630 would be short-term targets, which is around 45 points from here on, 55 points rather from here on, and support would be at 549. So I think there is a good risk reward in the short term on the long side.
Moving on to the next stock, and Mamakshi, you've picked out e-clerks for us. Why is this one in focus? What is the news flow that you're picking up here?
Well, yes, e-clerks is in focus on the back of the commentary that came through in an analyst meet. In fact, we have some important takeaways coming in from MK this time, and what they have highlighted is that demand trends have improved as compared to the first quarter. The company is likely to deliver at least the revenue that was posted in the fourth quarter in the ongoing quarter. But they have highlighted that there are some clients that have some specific challenges, and these challenges do continue to persist as far as e-clerks is concerned. The transition to the new MD and CEO, which is Kapil Jain, is currently underway. Co-founders are gradually taking a back seat from running the day-to-day operations, and in fact Jain has his own strategy in place, and he does have the operational freedom to run the business in the next few months. The founders are involved in capital allocation decisions as well as board level deliberations thereafter. Now overall, what they're expecting on the margin front is that the margins are expected to increase gradually through the year, but they are expected to remain below the 28 to 32% target range for FY24. So on the back of that commentary that came in from the management, we have e-clerks in focus today. As of now, the stock is, however, trading in the red.
Then another stock trading in the red is Lupin. Jay, you have already highlighted your bearish call on Dr. Reddys. Now is the time for Lupin for some profit booking?
Absolutely. The stock has given a very strong run up, I would say, from 640 until 1140 almost. So that's a 500 points straight move which we have seen, and that was very much likely because the overall pharma pack was doing quite well. And now I believe that the way the momentum has weakened, we have seen some negative divergence, and finally now the stock price also reversing along with the momentum. There is a very high chance that the entire move which we are seeing from 640 into 1140 will be retraced, and in that process I think the stock is likely to fall to the levels of 1000 to 970. Those will be short-term targets going forward, and now On the upside, I believe that 1170 will be a very crucial resistance. So you see, there's a upside risk of 65 points if someone is selling this, but then there's a good downside potential of almost 130, 140 points. So there is a good risk reward of almost 1:2 on Lupin on the sell side.
Okay, let's move on and talk about NBCC and Harsh. I believe this one's in focus on the back of an order win.
You see, it's the construction for various development work at a township and mines of Sale Bhilai steel plant. NBCC has won this order worth 100 crore, and what you're looking at in terms of top line, quarterly top line of roughly 1500 odd crores, so 100 crore added to that, definitely chipping away on that order pipeline that NBCC has built up and continues to build up. So back of that, up around 0.4% in trade today, NBCC.
Okay, moving on then, and Jay, Ambuja Cement is the counter that you have picked up. How are the charts looking like for this one?
Well, if you see, and cement pack is one such sector, I would say, which has seen some good correction now in the short term, and it is likely to see some further short build up, or maybe some selling pressure as well going ahead, because if you check Ambuja Cement, the ACC, Ultra Cement, all of this have clearly reversed, and the momentum has also reversed out here. Now, when talking about Ambuja Cements, the overall uptrend which we have seen was in a very clear upward sloping channel. That channel has been broken on the lower side. We have seen the retest of the channel happening on the upside, and again the fresh lows which are getting formed. So this clearly indicates that going forward, Ambuja Cement is likely to correct at least until the levels of 390 in the short term. On the upside, 440 will act as a very crucial resistance. The near-term trend for all the cement stocks will be negative, especially for Ambuja, at least till the levels of 390.
Okay, 390 is something that Jay is watching out for. Ambuja Cements. We're moving on to some of the new listings on the board today, and today we had the listing of Sami Hotels, wherein a bit of a tippet listing coming in for this counter, listed at a premium of 7% to its issue price, and now holding a gains of 9.3% right now, because do remember, this particular company actually acquires or builds in primary business hotels and owns a portfolio of 4,801 keys across 31 hotels in key urban centers in India, and that's the latest data. So Sami Hotels got a decent subscription, but not a great listing, I would say, but still in the weakish market, the stock is still holding in gains of 9%.
Let's move on and talk about ICICI Lombard. That's the next stock that is in focus today, and this one is on the back of a brokerage note where we have Morgan Stanley, which is maintaining an overweight rating given a target price of 1,555 rupees per share. Now, obviously, the news flow mainly of this note was also that Bhargav Dasgupta is to pursue a career opportunity outside the country, and Dasgupta served as the MD and CEO for a period of over 14 years since May 2009. Now, Dasgupta has stepped down anyway by April 2024. So on the back of this, there was this note which came out from Morgan Stanley, though they're still maintaining an overweight rating. But yes, an exit is coming in on that front. He was the MD and CEO of the company. He's exited. So let's keep an eye on this one. Today, the stock is down almost 6% in trade.
Let's shift focus to one of the other counters that have seen a phenomenal run-up, and HAL is the counter that you have picked up from the defense pack. They have been very volatile in terms of some days of gain and some days of profit booking. So at current point in time, how is HAL looking to you?
Well, undoubtedly, I would say that this entire sector has seen a very strong run-up, and it's kind of a dream run-up for all of these stocks so far. The outlook, obviously, for the long term is positive, I'm sure. But then, when we look at this chart structure, at least for the short term point of view, then since June, we have been seeing a clear negative divergence in the momentum, wherein the price was moving up, the momentum was going down, and now finally, I think with the fresh sell crossover in the short term momentum indicators, and with low tops, low bottom getting confirmed on the daily charts, I think the probability of a downside on HL is quite high, at least in the levels of say 3600 on the downside. It's trading around the levels of 3860. So 3600 levels can be seen, and on the upside, I believe now 4000 levels will act as a very crucial resistance. So the risk reward is definitely good on the sell side out here on HL, and we will definitely see some profit booking going forward.
Let's move on to the next stock and Unicam as well as Ipca Labs. Those two are the stocks that you've picked out for us now, Harsh. And why are both of these counters in focus today?
Well, yes, so Unicam continues to acquire Ipca Labs, of course. There was that open offer that came through as well. And what's been given to understand is that company made the open offer for 26% of equity at 440 rupees a share. Now, currently what we're given to understand is that we're seeing that the amount aggregates to around 805 crore and the open offer closed on the 8th of September. The company has accepted around 1.36 crore shares, which was tendered for 598 crore being the consideration, representing around 19.3% of the 26% of the share capital, which was set to be acquired. Now the acquirer, of course, holds around 53% equity shares. That's the development coming through. Both stocks are mildly in the red on the back of that.
Okay, Harsh, thank you so much for highlighting why Unicam Lab as well as Ipca is in focus right now. But with this, viewers, we are completely out of time in this edition of Market Fatafat. Thank you so much, Harsh and Vamakshi, for highlighting all the stocks that are buzzing in onto the technical side. Jay, thank you so much for joining us. But with this, it's a goodbye from me and Winnie and the entire team who put this show together. As of now, the markets are seen to be drifting led, but Bank Nifty is something that is still holding itself in green. So let's see in the last 1 hour it continues to do so or not. But don't go anywhere. Closing trades will take the action ahead.